Welcome to TradeTheNBA.com. This is John's report. It's for the 8th of November, and well, just like we were talking about yesterday, we were still in a buy signal. Things were still on track. I was talking about moving back up towards these highs. I got a few comments back from some people who thought I was in lunacy. Didn't I know about blah, 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 blah? And that's why I say blah, 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 because you can fill in the blank with too much debt, this, that. But you know what? Growing economy, nice retrace, clear indication of new buyers. We also were right at the time of the month that new buyers like to pop in. They had to wait for the election. Boom, it was done, and there you have it. Now the uncertainty is gone, and when there's clarity, you have direction of purpose. And boom, we moved exactly, well, we're pretty close to the back to this peak up here. Right in that line of that 28, I think I had 28.17 on the 5K chart. We'll look at it in a second, but you know, right up to 61. So we went from the previous algo, positive extreme retrace 27.62 there, right up to the 61%, literally right on it before it hit some resistance, and slightly under it right now. But you can clearly see it here. The orange still making attempted move higher, but once the green is over the cyan, it negates it. So all you have is rising red, rising shakeout, which should be right on positive, which it pretty much is. And that will cause the ATR spike up a little bit as well. So here it is with the NQ showing the pink bar with the pivots and that, and how it corresponded perfectly with that. All good stuff. Euro had a massive spike for no real apparent reason, because things in Europe have not improved at all. But it did give justification for that money to come back out of the euro and back into the U.S. equities as they were skyrocketing, because now you have the fear of missing out. And that's a beautiful thing. First, it's the fear of buying into ever rising highs, and then it becomes the fear of, okay, did I not buy the right dip? Welcome to trading. Anyway, bonds coming back down. However, we got FOMC coming up here, so the likelihood is that rates are going to rise. This has to fall. You had a little bit of the fear pop up going in there, where people thought, oh, it's disaster, blah blah blah. Not. Oil continuing its soft fade. I mean, it's fairly ugly in the shakeup, but it had gotten out of control with the whole Iranian sanction, blah, blah, blah. Now we know that the Iranians have pretty much foregone that and pretty much selling Europeans the oil, so there's no supply disruption whatsoever. And that's going to, while it may look like gold's under a little bit of pressure, it's just consolidating up here, preparing for a new breakout. It's got a complete reset. And I would expect gold is going to go higher, particularly if rates rise. You're going to have all sorts of competition asset-wise if rates continue to climb, especially without inflation. It's sort of an interesting thing. They're just raising it because the economy is growing, not because there's any real justification that there's a out of control or spiraling. But it's also an opportunity for the Fed to just unload their balance sheet, and they're enjoying doing that. But here was the day. Despite the fact that you had this massive run, we still ended up with some decent retraces that came through. We're going to have some new ones pop up right about here, 27.64 at some point. Then the last range that didn't get filled was right up here at the 27.89. That would make sense from a normalized retrace, because this was a massive move. It was just like straight up for the most part, and you really didn't get many moves of steel coming back above. It pretty much stayed below with the cyan, fairly decent throughout most of it. It wasn't until very late in the day, and then you started to match your shakeouts, and then we started getting a little bit lower, which would entice some people if you didn't have this complete reset of your steel while you're seeing a DOC spread. It just didn't quite produce anything super significant. This was the best spike that took place right here as the day changed. That was just slightly off the highs, and it's filled in a few of these, but There's still a couple more to go. And this is what I was talking about, that 2817. This was a previous algorithm activity from way back. And we hit 1775, which, if that had been on snap mode, that's exactly what that would read. So, right in line with it. The difficulty when you're having an up move day like this is when you start seeing it go 20, 30 points, you're always thinking, oh, I want to catch that great short. But more often than not, these days end at their highs, because once you get the momentum going and you have shorts trapped, it's just a beautiful opportunity to just keep squeezing them. And that's exactly what happened. And what you're really looking for is that breakdown of the red. You got a couple of them that happened here, and you did get a retrace, just not that much, because you had the quick turnaround of the steel crossing the red, and that signaled the end of the shorts that would pop up here and turn around there. And then finally this last one came through. Similar warning with the steel, but the immediate rejection allowed that to follow through, and it happened to hit the ABM. Right now, you're sort of caught in a no man's zone, which usually is a continuation for a little bit more lower. So we're -5 now. We would expect that to fade just a little bit. And all in all, I think that we're pretty much calling it as it is. We expected volatility to keep being active, and when you have 50+ point moves on the ES or for the S&P, that's significant. And I don't think that it's going to stop, because when you get those kind of exacerbated moves, you're also going to have exacerbated retraces that fill back in and ebb and move forward. In this particular case, though, economy is still strong, and until someone says otherwise, post-election midterms usually lead to buying all the way through December and that. So just be wary if you're thinking that you just want to attack to the downside without justification. As always, though, trade well. We'll talk to you later. Look forward to updated charts on the Skype chat.